Hey folks, welcome to today's The Steady Trader video. Well, today I want to give you guys a bit of an update on something we talked about last week. In fact, if you go to the YouTube channel, or I'll link it here somewhere here, or at least down below in the comment box to that video from last week at some point. I think it was the 17th of July. I talked about money rotating into financial stocks and the sector and group rotation. I'll show you guys on the charts here in just a second. And that's the essence of what I do. It's the essence of all my tools, my entire process, what we do in the different memberships we have, different trade alert services, and then the coaching packages, all that stuff. And of course, the money management and advisory stuff. It's all based on that sector and group rotation stuff, which requires you to look at the market top down because you want to see where the odds are. So I want to give you guys a bit of an update and kind of show you what happened. So let me quickly flip the camera. And this was the video from last week. Again, I'll put a link down below. But what I showed you guys at the time was that money was flowing into financial stocks. And it was this green line that we were talking about. Now, I'll show you this in almost the same exact terms, but in a bit of a different chart. And what you have here now is I took the financials ETF, the XLF, which represents the financial sector of the S&P 500 financial stocks, and I divided it. I'm going to drag this down a little bit, and I divided it by the S&P 500, as you guys can see here. And you can see this rally here over the past week or so that's really a reflection of money moving into financial stocks, not just in absolute terms, but also in relative terms. So even though the S&P has also gone higher over this time, the financials have outperformed this market. And again, I showed you guys this on the video here on July 17th. It's here. Again, I'll put a link here or down below, whatever. And so that continues to work. And I want to give you guys a couple more charts. So if we now look at this through the lens of some of the constituents, and I'm going to go and look at the XLF itself now on a candlestick chart. And what you can see here is that this is, again, just from a technical perspective, we're now pushing above a fairly meaningful confluence resistance area. And I'll draw a couple more lines so you guys can see this. So first of all, obviously, and I think anyone can see this, we're pushing, out of this formation. And look at these three colorful lines, these lines here. That's the 50 moving average, 50-day, 100-day, and 200-day respectively. And we're pushing above there. Now, interestingly, if I make this a weekly chart, and of course this week is far from over, but we're also now so far on a weekly basis starting to push above there. Again, keep in mind, it's literally, we've had one trading day this week so far, so this is absolutely no home run just yet. But it's interesting to watch this, and if you break it down on some of the constituents, look at something like Bank of America, look at Citigroup, all stocks that I think are totally game to buy here for a bit more to the upside. I personally, we sent out a real-time trade alert to our clients last week on the back of that video I made for you guys, buying the XLF. Again, this is the sector ETF, and the reason I chose to buy the XLF rather than individual stocks is because I just wanted to kind of extract a little bit of the idiosyncratic risk. Idiosyncratic, I know that sounds like a big word. It just means risk specific to, in this case, a security, right? And I'd rather just play the theme higher. And there's actually a lot to be said about that. And I'll talk a lot more about ETFs here over the next couple of months or so because we're doing a lot of ETFs. I've always traded a lot of ETFs. And we're actually also releasing a product and a scanner for ETFs trading and investing. So stay tuned for that. But we'll talk a lot more about that. So I just want to give you guys an update and show you how that worked, the call that we made right here in the video live on the 17th of July. And it continues to work. Again, I'll quickly show you that here. Again, we talked about that relative strength coming in. And so far, again, that's working quite well. From a stop loss perspective, certainly any strong bearish reversal that wipes out the past few days of gains or so would certainly be a stop loss. So anyway, I hope this is helpful, folks. Have a wonderful Tuesday, and I'll talk to you guys tomorrow.